Section 1, on the creation of obligations, page 205. Number 8, personal credit or mercantile character is purchasing power, and as first pointed out by Demosthenes, and now universally acknowledged, is wealth. But personal credit does not enter into economics until the merchant actually exercises his credit and makes a purchase with it. When a merchant purchases goods on credit, it is an absolute sale, just as much as if it had been effected with money. He acquires the actual property in the goods as fully and effectually as if he had paid for them with money. In exchange for the goods, he gives a promise to pay their price at a future date. That is, he creates a right of action against himself. This right of action is a credit or créance or debt, and is the price of the goods and is the property of the seller. Thus, at the very instant that the property is in the good, thus, at the very instant that the property in the goods is transferred to the buyer, a contract or obligation is created between the two parties, which consists of two parts. Number 1, the right to demand payment in the person of the seller or creditor. 2, the duty to pay in the person of the buyer or debtor. These two quantities constitute the contract, obligation, or bond of law between the two parties. This obligation consists of two equal and opposite quantities and may be denoted by this symbol, plus 100 pounds minus 100 pounds, visual aid, where the plus 100 pounds denotes the creditor's right to demand payment, and the negative 100 pounds denotes the debtor's duty to pay. Also, if either of these quantities be destroyed, the other is also destroyed with it. Hence, as these two equal and opposite quantities come into existence together, can only exist together and vanish together, they are analogous to polar forces. Division of opinion among jurists as to the position of a debtor in an obligation. Number 9. We have now come to the most abstruse and subtle point in economics, which will demand the closest attention because it is the great Serbonian bog in which multitudes of writers, literary and mathematical, have been swallowed up from a want of knowledge of the most elementary principles of mercantile law and practical business, and its rectification and elucidation. And its rectification and elucidation will open up a completely new branch of inquiry of the greatest novelty and interest. When an obligation has been created between two parties by the sale of money or goods on credit, the case of the creditor is clear. In exchange for the money or goods, he has received a right of action. This is his property, which he can sell or dispose of in any way he pleases, for other goods or for money. But a strong division of opinion exists among jurists as to the position of the debtor in the obligation. When a merchant has bought goods and given a bill at 3 months in exchange for them, is he in debt at the present moment, at the present time? Roman jurists and English jurists hold different doctrines on this point. The Roman jurists held that when a person has contracted a debt payable at a future time, the debt is created at the time of the obligation, but that the remedy is suspended until the time for payment comes. Debitum in presenti, solvetum in futuro is the maxim of Roman law. When the contract was created, it was said dies cedet. When the time for payment had come, it was said dies vinet. But English law holds a different view. As the word debt in English law means the abstract personal duty to pay, it holds that no debt is created until the duty to pay comes into existence, i.e., until the day of payment has come. It is a maxim of English law that credit unexpired may be pleaded under the general issue, which means that if an action is brought against a person who has contracted an obligation payable at a future time, before the time for payment has come, he may reply that he is not in debt at all. Thus, Pitt-Taylor says, in addition to these examples, it may be observed that whenever the defendant can show that in fact no debt ever existed before action brought, he may do so under the plea of never indebted. Thus, for instance, if the action be for goods sold and delivered, he may defend himself under the plea by proving that they were sold on credit, which was unexpired when the action was commenced. A few examples will show the correctness of this view. Suppose that a tenant takes a house or apartment and agrees to pay the rent quarterly. Suppose that the day after he had entered into possession, the landlord came and demanded his rent. What would the tenant say? He would say, "My good friend, Mr. Landlord, I owe you nothing. The bargain is that I am to have the use and enjoyment of this house for 3 months before the rent becomes due and payable. My debt or duty to pay does not come into existence until then. Good morning to you." So when the farmer takes a farm on a lease of 19 years and becomes bound to pay the rent half yearly, the agreement is that he is to have the use and enjoyment of the farm for intervals of 6 months before each installment of rent becomes due. The successive rents are intended and expected to be paid out of the successive profits made out of the farm. And it is obviously absurd to say that the farmer is indebted at the present time for rent which only becomes due 19 years hence, and is intended and expected to be paid out of profits which will only come into existence 19 years hence. The case is obviously the same with a merchant who has bought goods and given in exchange for them his promise to pay the money for them 3 months hence. He is not in debt at the present time. No debt or duty to pay comes into existence until the bill becomes due and payable, and the amount of the bill is not to be subtracted from his present property. The importance of the consideration consists in this. It is commonly supposed that when a person is bound to make a payment at a future time, the sum due is to be subtracted from his personal property, and that it is a diminution of it. It is usual to denote debts by the negative sign, and according to this view, if a person possessed 100 pounds and is bound to pay 30 pounds 3 months hence, and therefore his property would be represented by 100 pounds minus 30 pounds, that his property would only be 70 pounds. But this view is entirely erroneous. In this case, the sign does not mean subtraction. What it does really mean will be shown further on. The debtor has the full property in his 100 pounds to do with exactly as he pleases. His duty to pay has no present existence. It is no subtraction from his present property. The expression is not to be read as if he had only 70 pounds. The debt is a mere abstract personal duty, and a personal duty cannot be subtracted from a material sum of hard money. The expression is to be read this way: he possesses 100 pounds in money, but coupled with the duty to pay 30 pounds at some future given time. Hence the sign does not mean subtraction in this case. It is a mere memorandum that he has to make an exchange at some future time. Advantage of adopting the conception of economics as the science of exchanges or of commerce. 10. We now see the advantage of adopting and firmly grasping the conception of economics as the science of commerce or exchanges, because all the mechanism and phenomena of the great system of credit, which are a helpless puzzle and perplexity as long as economics is treated as the production, distribution, and consumption of wealth, becomes perfectly clear and simple when it is understood to be the science of commerce or exchanges. Every case of a loan of money or a sale of goods on credit is an exchange or an act of commerce. In exchange for the money or the goods, a right of action is created, and is the price of the goods. This right of action is a saleable commodity, which may be bought and sold like any material chattel, and it has value because it will be paid in money. This right of action may circulate in commerce exactly like a piece of money and affect any number of exchanges exactly like a piece of money until it is paid off and extinguished, and then it ceases to exist. The debt is created by one exchange. It then may affect any number of exchanges, and when it is due, the holder of it brings it to the debtor, who gives the money in exchange for the right of action. Thus, the debt is created by one exchange and is extinguished and is extinguished or annihilated by another. And thus, the whole system in operation on credit is merely a series of exchanges. On the errors made by some mathematicians in terming debt's negative quantities. 11. The juridical theory of credit worked out by the Roman jurists was sufficient for all practical purposes. They explained how credits, rights of action, or debts are created, how they may be transferred, and how they are extinguished. But this is not sufficient for the full scientific theory of the subject, because they treated these credits almost entirely from the creditor's side. But in every obligation, there are two parties, the creditor and the debtor. Now, when two persons are bound together by an obligation such as that of debt, it is usual to term the creditor the active or positive agent, and the debtor the passive or negative agent. Hence, to complete the full scientific theory of credit, it is necessary to develop it from the debtor's or negative side, as well as from the creditor's or positive side. Accordingly, for the past 150 years, from the days of Maclaurin at least, mathematicians have been in the habit of giving debts as examples of negative quantities. But they have entirely failed in giving an explanation of the term negative as applied to debts which are suitable for economic science. The explanation usually given is this: a man's property may be considered as positive and his debts as negative. Subtract his debts from his property, and the remainder, if any, is his substance or capital. And as the national capital is the aggregate capital of all the individuals in it, according to this doctrine, in order to find the quantity of capital in the country, all the floating debts in it would have to be subtracted from all the property in it, and the remainder would be the national capital. So Peacock, the distinguished algebraist, says if property possessed or due could be denoted by a number or symbol with a positive sign, a debt would be indicated by a number or symbol with a negative sign, or conversely. Such affections of property are correctly symbolized by the signs plus and minus, since they possess the inverse relations to each other which these signs require. For if to a person A there be given a certain property or sum of property with or added to a debt of equal amount, his wealth or property remains the same as before. Now, in a certain sense, these modes of statement have some semblance to truth. If a person were going to retire from business, he would call in and discharge his debts or liabilities, and the remainder, if any, would be his fortune. But such a mode of statement is quite unsuitable for economics. Economics is purely the science of exchanges, and it has only to do with quantities while they exist, and all exchangeable quantities are economic quantities and are the subject of commerce. Debts or credits are a species of property of the most colossal magnitude and are the subject of the most gigantic commerce of modern times. They are a species of property far exceeding any other kind of property except the land itself. And what are they to be subtracted from? The explanation given above by Peacock is entirely inapplicable to the business of banking, as will be shown in a future chapter. The fact is that mathematicians have completely mistaken the supplication of the signs plus and minus in this instance. The fact is that mathematicians have completely mistaken the application of the signs plus and minus in this instance from a want of knowledge of mercantile law. Mathematicians are accustomed to treat of quantities and operations, and as these may each be of opposite or inverse qualities, they apply the signs plus and minus to them. But in economics, the signs plus and minus do not affect property, but persons. As will be shown hereafter, persons may stand in inverse or opposite relations to each other, as well as quantities or operations, and persons who stand in these opposite or inverse relations may be designated by the signs plus and minus, as well as quantities and operations. Every student of mercantile law will at once perceive Peacock's error in the above extract, because credits or debts are not jura in re, they are jura in personam, and the passive or negative debt is not money owed by the debtor, but the abstract personal duty to pay money. Two algebraists of the highest eminence, Euler and Peacock, have attempted to explain the meaning of the negative sign as applied to debts, but they have both failed from a want of knowledge of the principles of mercantile law. Error of Euler in terming debts negative quantities. 12. Euler says, the manner in which we calculate a person's property is an apt illustration of what has just been said. We denote what a man really possesses by positive numbers, using or understanding the sign plus, whereas his debts are represented by negative numbers or by using the sign negative. Thus, when it is said of anyone that he has 100 crowns but owes 50, this means that his real possessions amount 50 minus 100 minus 50, that is to say 50 crowns. As negative numbers may be considered as debts, because positive numbers represent real possessions, we may say that negative numbers are less than nothing. Thus, when a man has nothing in the world and owes 50 crowns, it is certain that he has 50 crowns less than nothing. For if anyone were to make him a present of 50 crowns to pay his debts, he would still be at the point zero, though really richer than before. It will be seen that the statement in the first paragraph commits exactly the error which we have recently pointed out at length. Suppose that the person has 100 crowns and is bound to pay 50 crowns at the end of a year, when his property would be correctly stated as 100 crowns minus 50 crowns. But it would be quite inaccurate to say that his property was only 50 crowns, because he has the 100 crowns, which are his absolute property to dispose of or trade with exactly as he pleases in the meantime. And he is only bound to have 50 crowns at the time of the year to discharge his debt. Moreover, as we have shown, the debt is the abstract personal duty to pay, and it does not come into existence until the time for payment has come. Consequently, the person is not in debt at all until the end of the year, and consequently, the debt, which does not exist, cannot be subtracted from his property. But the owner of the debt may put it into circulation, and it may be sold, transferred, or exchanged, and produce all the effects of money any number of times until it is paid off and extinguished, so that there may be the 100 crowns and the right to demand the 50 crowns circulating simultaneously in commerce. Moreover, as the 100 crowns are solid money and the debt of 50 crowns is only the personal duty to pay money, it is quite evident that an abstract personal duty cannot be subtracted from a solid sum of hard cash. Moreover, by the law of continuity, if we diminish the period of payment gradually and continuously until it reaches zero, and the debt becomes payable on demand, that in no way alters the general principles of the subject. A duty to pay, though immediately due on demand, cannot be subtracted from a material sum of money. The debtor's money remains absolutely intact until he voluntarily buys up the right of action against himself by voluntarily giving 50 crowns in exchange for it. The fact is that the expression is to be read in this way. He possesses 100 crowns, but coupled with the duty to pay 50 crowns at some given time. In the second paragraph, when the debtor possesses 0 crowns and owes 50 crowns, he is said to have 50 crowns less than nothing. This clearly means that he is under the duty to pay 50 crowns and has 0 crowns to pay them with. Now suppose that being in such a position as Euler says, someone makes him a present of 50 crowns to pay his debt with. He pays the debt. He is 50 crowns richer than he was before, but still his property is now 0. This is an example that plus times plus minus plus. Thus, Euler is right so far as he goes, but he has stated only one half of the case, because there is another combination of algebraic symbols which gives plus, namely minus times minus, and there is another method in commerce of arriving at the same practical result. As any person, whatever, may give the debtor 50 crowns to pay his debt with, suppose that the creditor does so. Then, having received the 50 crowns in a present from the creditor, the debtor hands them back to the creditor in payment of the debt, which is then extinguished. The debtor is now, as in the former case, richer by 50 crowns than he was before, and his property is now 0. The same result may be attained in another way. Suppose that the creditor simply releases the debtor from his debt. Then, as in the former case, his property would be 0, and he would be 50 crowns richer than he was. Now, if crowns are plus, and to give is also plus, then the debt is minus, and to cancel or take away is also minus. Consequently, to give money is plus times plus, and to release or cancel a debt is minus times minus. And the position of the debtor will be exactly the same after each operation. This shows that the release of a debt is, in all circumstances, equivalent to a payment in money. So it is shown that in commercial, as in all algebra, plus times plus equals minus times minus, an example of the permanence of equivalent forms, and a principle of the most momentous importance in modern commerce. Error of Peacock in terming debts, negative quantities. 13. Peacock, dean of Ely, who published the most philosophical treatise on algebra in his day, and who was the first to introduce the theory of signs into a standard treatise, endeavored to apply the theory of signs to the theory of credit or debt. But he has fallen into the error so carefully provided against in the digest, and by all jurists since. He says, a merchant possesses A pounds and owes B pounds. His substance is therefore A minus B, when A is greater than B. But since A and B may possess every relation of value, we may replace B by A minus C or A plus C, according as A is greater or less than B, in the first case, we get A minus B equals A minus, and in parentheses, A minus C equals C. And in the second, A minus B equals A minus, in parentheses, A plus C equals negative or minus C. If therefore C expresses his substance or property when solvent, minus C will express the amount of his debts when insolvent. And if from the use of plus and minus as signs of affection or quality in this case, we pass on their use of signs as operation, then inasmuch as A plus, in parentheses, negative C equals A minus C, semicolon, and A minus, in parentheses, negative C equals A plus C. It follows that the addition of a debt, negative C, is equivalent to the subtraction of property, C, of an equivalent amount, and the subtraction of a debt, negative C, is equivalent to the addition of property, C, of an equal amount, and it consequently appears that the subtraction of debt in the language of symbolical algebra is not its obliteration or removal, but the change of its affection or character from money or property owed to money or properly possessed. Peacock, as is seen, arrives at the conclusion that the subtraction of a debt is equivalent to the addition of property. The conclusion is right, as we have seen above, but his method of arriving at the conclusion is erroneous, as has been so repeatedly pointed out by jurists. The negative sign, minus, is not a sign of affecting the money or the property, but it is a sign affecting the person of the debtor. If such a distinguished mathematician as Peacock had only reflected, he could not have failed to perceive that his interpretation of the negative sign as applied to debts could not be correct, because the signs plus and minus always refer to similar quantities, but of opposite quantities. Because the signs plus and minus always refer to similar quantities, but of opposite quantities. Now, the sign plus represents the creditor's personal right to demand a sum of money, and a material sum of money can, by no possibility. Peacock, as is seen, arrives at the conclusion that the subtraction of a debt is equivalent to the addition of property. The conclusion is right, as we have seen above, but his method of arriving at the conclusion is erroneous, as has been so repeatedly pointed out by jurists. The negative sign, minus, is not a sign affecting the money or the property, but it is a sign affecting the person of the debtor. If such a distinguished mathematician as Peacock had only reflected, he could not have failed to perceive that his interpretation of the negative sign as applied to debts could not be correct, because the signs plus and negative always refer to similar quantities, but of opposite qualities. Now, the sign plus represents the creditor's personal right to demand a sum of money, and a material sum of money can, by no possibility, be the inverse of an abstract personal right. It must be something which is the inverse of a right, and the inverse of a right is a duty. Peacock's mode of stating the question confounds the distinction between a debtor and a trustee. A person who merely holds a sum of money to which another person has a right, or a trustee, it has a right, is a trustee and not a debtor. A debtor is a person who is under the abstract personal duty to pay a sum of money, but until he voluntarily pays it, the creditor has no right or property in it. Moreover, Peacock's mode of statement sins against the philosophy of science, because economics being the science of exchanges, and that only, all questions in economics must be stated in the form of an exchange. Economics has nothing to do with addition and subtraction, but only with exchange, and all questions of contracting and extinguishing debts must be stated in the form of exchanges. All debts are created by one exchange, and they are extinguished by another exchange. And this, as we shall see, gives a complete explanation of the subtleties and perplexities of the theory of credit. In this case, therefore, the signs plus and minus as signs of operation do not mean addition and subtraction. What they do mean will be shown further on. The result which Peacock arrived at is correct, but it is not produced in the way in which he says it is, but in the way he says it is not. Further error of Peacock. 14. We have shown that Peacock is mistaken in his attempt to apply the sign minus to debts, but he is also mistaken in his attempt to apply the symbol check mark -1 to property. He says if a denoted property possessed and minus a debt, or negative a debt, and insert check mark division sign -1, a might denote property neither possessed nor owed, such as a mere deposit might be. He has explained his views at greater length further on. There are many cases, however, of quantities which cannot be represented unless symbolically by lines, which are susceptible of affections denoted by plus and minus, which are appropriate to their specific nature. Thus, if A represented property possessed, negative A may represent the same property owed. Under such circumstances, what is the meaning which may be attached to Under such circumstances, what is the meaning which may be attached to a division sign of -1 and negative a with a division sign of -1? If we consider the succession of quantities, two mathematical formulas inserted on page, and if the first represents property possessed and the third property owned, the second can neither represent property possessed nor owed under the same circumstances or by the same person, in as much as in such a case, it would be symbolically represented by A or -A, colon. It may represent, however, property deposited, which admits of similar relations when considered as property possessed and property owed by another person. Under such circumstances, the affectation of a denoting property possessed by A by the sign, division sign -1, would convert it into property possessed by B, and the affectation of A, division sign -1 by division sign -1 would convert property owed by A into property owed by B. And fourthly, the affectation of -A, division sign -1 by division sign -1 would convert property owed by B into property possessed by A. The repetition of the process of affectation by the sign, division sign -1, would reproduce continually the same succession of transfers of property from A to B, and of conversions of property possessed into debt, and of debt into property possessed, which is required to correspond to the succession of the same symbolical results. In this case, the interpretation of the sign, division sign -1, which we have given, satisfies the symbolical conditions and also coincides with the interpretation of the meaning of the signs plus and negative, which is otherwise established. We cannot give it the additional authority of the coincidence of this interpretation with the interpretation of the meanings of the quantities corresponding to A squared and -A squared, for those quantities in the case under consideration admit of no interpretation. It is really impossible to extract any intelligible meaning from this case of the sign, division sign -1, to property. The fallacy underlying the whole paragraph is the one which is so common among lay writers, namely that a debt is property owed. A credit is the abstract personal right residing in the creditor, and the debt is the abstract personal duty to pay residing in the debtor. And these opposite personal affections are correctly represented by the symbols plus and minus, but they have no relation to any specific money or other thing. Now the symbol, division sign -1, denotes that operation, which being twice repeated changes plus into negative. If we move a line through 90 degrees, it is perpendicular to its former position and is denoted by the sign, division sign -1. And if we move it through 90 degrees more, it then forms a straight line with its former position. And is that denoted by the sign negative. But depositing the thing twice with a person does not change property into a debt, nor does it transfer the property. The fact is that if the sign, division sign -1, had any application at all to economics, it would mean that operation, which being twice repeated, changes a right to demand into a duty to pay. But what possible operation could have that effect? Absolutely none whatever. Consequently, it is evident that the sign, division sign -1, can have no application in economics. Economics is a science of one dimension. It acts entirely in single lines between persons. Now, the sign, division sign -1, is not applicable to any science of one dimension. It requires a science of at least two dimensions, such as an area. De Morgan has expressed similar sentiments in his article Algebra in the English Cyclopedia. It is impossible that a perfect algebra can be founded on ideas of time, loss and gain, or any in which only two directions can be imagined. Space, from the infinity of directions which it admits, is as yet the only perfect medium of explanation. Time before and time after a certain epoch may be represented by the positive and negative quantity. But what is there in the idea of time to which the sign, division sign -1, can possibly apply? Again, show us a commercial operation which, performed upon a gain, produces a sort of result which can neither be called a gain or loss, but which, repeated 2 or 3 times upon a gain, turns it into a loss. And we can immediately see a system of commercial algebra in which division sign -1 shall be intelligible. But no such operation can be imagined. The fact is that Peacock's error consists in interpreting the symbol division sign -1 as a sign of affection, whereas it is purely a sign of operation. The fact is that Peacock's error consists in interpreting the symbol division sign -1 as a sign of affection, whereas it is purely a sign of operation. Error of Thorton and Chernushki on credit 15. We have shown the error of two very distinguished algebraists in their interpretation of the negative sign as applied to debts. We have now to point out the error of a plausible view held by two distinguished bankers. It has been asserted that credit adds nothing to the resources of the world because it is neutralized by something else. Any person practically conversant with commerce and seen that the enormously greater portion of commercial operations are carried on by credit would think it a strange doctrine that credit adds nothing to the resources of a nation or of an individual, because it is now universally agreed that the only true definition of wealth is anything which has purchasing power. The wealth of a nation or an individual is therefore their purchasing power, and their purchasing power is their money together with their credit. Credit is therefore purchasing power over and above and additional to money, and hence it must be a resource cumulative to money. Some writers, however, have maintained the contrary doctrine in a very plausible way, but which we shall show to be erroneous. Henry Thorton, an able man, a banker, and one of the authors of the Bullion Report, says, paper constitutes, it is true, an article on the credit side of the books of some men, but it forms an exactly equal item on the debit side of the books of others. It constitutes on the whole neither a debt nor a credit. So another eminent banker, Chernushki, says, the balance sheet of every individual contains 3 accounts, existing goods, credits, and debts. But if we collected into one all the balance sheets of everyone in the world, the debts and credits mutually neutralize each other, and there remains but a single account, existing goods. The totality of goods, therefore, forms the general inventory. There is the first matter of exchange. The debts and credits are subsidiary matters. Debts and credits are reciprocally transmitted as goods are transmitted, but however great or however small they may be, and through whatever hands they may pass, credits for some, debts for others, they add nothing to and take nothing away from the general inventory. The argument of Thornton and Chernushki is simply this. Suppose A to have 100 pounds in money and also a 3 months bill of 50 pounds on B. Suppose B to have 100 pounds on money and at the same time to have accepted a bill for 50 pounds at 3 months to A. Then A's property would be stated thus, 100 pounds plus 50 pounds, colon. B's property would be stated thus, 100 pounds minus 50 pounds. Now the argument of these writers is this, that the plus 50 pounds and the negative 50 pounds balance and neutralize each other, and the result is 0, colon, which according to them is the same thing as saying that these quantities do not exist at all. This view might perhaps seem at first sight somewhat specious, but a very little reflection will show that it is erroneous. It alleges that if there are 2 equal and opposite quantities in existence at any instant, which may neutralize each other's effects, and the result is 0, that is the same thing as saying that these 2 quantities do not exist at all. Suppose that 2 equal and opposite forces act upon a particle at rest. They neutralize each other's effects. The result is 0. But it would be highly erroneous to say for that reason that they do not exist at all. Suppose that the government on a division has 345 supporters and 300 opponents. The 300 members on each side neutralize each other's effects. And the result is that the force of the government is 45, but that does not imply that the 600 members do not exist at all. Hence, even if it were true that these equal and opposite quantities, debits, credits, and debts, neutralized each other's effects, it would be erroneous to say that that is the same thing as saying they do not exist at all. The error consists, as we have pointed out, in supposing that in the case of obligations not yet due, the debt is an existing negative quantity neutralizing the effect of the credit. The credit, or the right of action of the creditor, is an existent quantity which may be bought and sold like money or any other chattel. The debt or duty to pay does not come into existence until the credit has expired and the day of payment come, and consequently it cannot neutralize the credit. And even supposing that it is payable on demand like a banking credit, it is still an economic quantity until payment is demanded and it is paid off, and the debtor's property remains entire until he voluntarily gives some of it to buy up this right of action. These considerations are of supreme importance, as we shall see, in understanding the nature of banking. Personal credit is a person's purchasing power. Over and above is money. Hence, credit is wealth cumulative to money, and the whole mass of circulating credits are economical quantities over and above and additional to money. And they are in their nature and effects of every respect equivalent to an equal quantity of money. On the application of the theory of algebraic signs to economics. 16. The perplexities of the theory of credit, which have baffled all the economists in the world to explain, can only be unraveled by the great modern doctrine of the separation of the signs of affection or distinction and operation. As the introduction of this great doctrine into economics is perfectly novel, we shall have to treat of it rather fully, especially as there may be students of economics who are not familiar with it in other sciences, and we shall endeavor to make it intelligible to those who have not become acquainted with it already. It is a remarkable example of the almost universal truth that practice has always preceded theory, that even the practice of science long preceded the theory of science. 1600 years ago, Diophantus said, defect multiplied into defect gives existence. And it is said in the Basilica, two negatives make an affirmative. This is simply the algebraic doctrine that negative multiplied by negative minus plus colon. And from the days of Diophantus, there has been perfectly well understood as an empirical rule in algebra. When the great pioneers of algebra in modern times, Harriot, Fermat, Vieta, Descartes, Cardane, Tartaglia, and others, translated their reasonings into general symbols, they found that they had created a machine whose workings they were not able fully to apprehend. They found, among other things, that many problems produce negative answers. Unable at first to apprehend the meaning of negative answers, they believed that they had no real interpretation, and they called positive roots true, in parentheses, vera radices, colon, and negative roots false, in parentheses, ficta radices. In the progress of natural philosophy, the negative sign was used in a vast variety of quantities, but no general theory of sign was devised. And the progress of mathematics was much impeded by the want of this generalization. The rule that minus times minus minus plus was universally adopted in practice because it alone produced right results. But algebraists were wholly unable to explain it. It was wholly unknown to Newton, and when he tried to explain it, the great Euler babbled like a child. Even so late as 1813, a distinguished mathematician at Cambridge denied the existence of and ridiculed the idea of there being any such things as negative quantities. Many centuries ago, at least about 1100 AD, Anno Domino, the Hindu algebraists had made considerable advances in explaining the theory of signs, but nothing was done in Europe till nearly the end of the last century. Since then, a new spirit of philosophy has been breathed into the old science, and a number of distinguished algebraists, Arbogast, Argand, Bouet, Armand, Carnot, Warren, Peacock, De Morgan, and others, have completely established the theory of signs, and their labors have resulted in what is called the separation of the signs of affection or distinction and operation. In most of the common books on algebra, the student is told that the sign plus means addition and the sign negative means subtraction. It is said that plus multiplied plus gives plus, colon, and that negative multiplied by negative also gives plus, a doctrine which, without further explanation, is an inscrutable mystery, not to say an absurdity, as appears in Freud's comments on the subject. Writers who are not versed in natural philosophy have no conception of the signs plus and minus, meaning anything but addition and subtraction. It is no doubt perfectly true that in some cases these signs do not have that meaning, but that is only one of their meanings. Everyone who has any knowledge of mathematics and natural philosophy knows perfectly well that in reality these signs have an immense variety of meanings according to the particular circumstances out of which they arise, or the body of facts to which they relate, and that it is wholly impossible to determine their meaning. It is wholly impossible to determine their meaning till we know the particular circumstances under which they arise. We must now explain the general use of these signs in mathematics and natural philosophy, and show how they are to be interpreted in the particular body of facts which constitute the science of economics.